Hello, and welcome to this chapter over insurance for senior citizens and special needs individuals. In this chapter, we will cover Medicare, Medicare supplements, Medicare Advantage, and Social Security disability. So first, let's start with Medicare. You need to know that Medicare is a federal medical expense program. It is designed for people 65 and older, even if they continue to work. It's also available to anyone younger than 65 if they've been on Social Security disability for 2 years, or if they have end-stage renal disease, chronic kidney failure. So no matter what their age, they could qualify for Medicare. Now, Medicare is divided up into 4 parts. Part A is their hospital insurance. It is financed through the government taxes, the FICA on their paycheck. Part B is their medical insurance. It's financed through a monthly premium and also tax dollars. Part C is Medicare Advantage. And then Part D is for drugs. So let's start with Part A. Part A, what's covered is inpatient hospital, skilled nursing, some home health care, and some hospice care. There are 3 different enrollment periods. First, there's the initial enrollment period, which is 3 months before and 3 months after the senior's 65th birthday. There's a general enrollment period, January 1st through March 31st. And then any special enrollment period that might come up throughout the year if their spouse was still employed. Now, Part A is automatic when a senior turns 65. And is premium free as long as they are fully insured. And remember, it's also available to anyone who's been on Social Security disability for 2 years, no matter what their age, if they have end-stage renal disease, or even ALS, Lou Gehrig's disease. No matter what their age, they can qualify for Medicare. Now, there is a deductible for Part A. You do not need to know the dollar amount. There's a lot of numbers within Part A that you do need to memorize here. First, you need to know that a total of 90 inpatient hospital days are covered per benefit period under Part A. Now, there are some daily copays on days 1 through 89, but you don't need to know those distinctions. Under skilled nursing, you need to know that the first 20 days of skilled nursing are covered 100% by Medicare. On days 21 through 99, there's some daily copays. And then you need to know a total of 100 skilled nursing days are covered per benefit period. And also that the senior must have been hospitalized at least 3 days before they enter a Medicare-approved skilled nursing facility. Also, you need to know that all blood is covered by Medicare after the first 3 pints. So the senior would have to pay for their first 3 pints of blood. Then Medicare would pick up everything after that. Part B of Medicare is the medical insurance. That's going to be the doctor's office, lab test, x-rays. Also under Part B is outpatient hospital. So that's important that you know that outpatient hospital is covered under Part B because inpatient hospital is covered under Part A. Part B is optional coverage. If a senior does take it, there is a monthly premium, and then there is a deductible. After the deductible, there's a 20% co-insurance with no stop loss limit. So that's 20% of all of their medical. Next, we have Part C, which is your Medicare Advantage. Part C, Medicare Advantage, is provided by HMOs and PPOs. So you need to know it's both HMOs and PPOs that provide Medicare Advantage. To get Medicare Advantage, a senior must be enrolled in both Parts A and B of Medicare. So A plus B equals C. And by the way, that is new math. Now, Part C is usually premium free to a senior. Some advantages of Medicare Advantage are there's no claim forms. Almost any medical problem is covered for a set fee. And then it may pay for some prescriptions, eye exams, hearing aids, and dental may be covered under Part C. Then we get to Part D, prescription drug plan. Part D is also optional. If a senior takes Part D, there is a premium and a deductible. After the deductible, the plan picks up 75% of their drug cost until they reach an initial benefit limit. Once they reach that benefit limit, then the senior is responsible for 35 to 44% of the retail drug cost. This is called the donut hole. You need to know the donut hole. Now, there's a whole lot of holes in Medicare, a lot of daily copays on their inpatient hospital, deductibles, 20% coinsurance. So that's why there are Medicare supplement plans to supplement the Medicare benefits. Another name for these are called Medigap plans. They're helping to fill the gaps of Medicare. Now, Medicare supplements are sold by private insurance companies like Humana, United Healthcare. Medicare supplements are guaranteed renewable, and they're guaranteed renewable for the life of the senior. Medicare supplements have a 30-day free look period. Under the Omnibus Budget Reconciliation Act of 1990, OBRA, and that is not Oprah, people, the NAIC standardized all Medicare supplement plans. What that means is all plans are the same from one company to another. Medicare supplements have an open enrollment period, so a senior must be signed up for both Parts A and B of Medicare. From when they sign up for Part B, there's a 6-month open enrollment period where that supplement is a guaranteed issue for them, even if they have pre-existing conditions. Now, the insurer can put a 6-month wait before pre-existing conditions are covered. However, after a supplement has been enforced for 6 months, the insurance company must cover all pre-existing conditions. Now, there are Medicare supplement plans. There are plans A through N. Plan A contains all the core or basic benefits. Those benefits must be found in all of the other plans in one form or another. You don't need to know the exact benefits that are covered under Plan A. Some of them, though, are like the Part A coinsurance and then the copayments for the hospital stay and skilled nursing. Part B, coinsurance and deductible, and then the first 3 pints of blood are just some of the big things that are covered. What I do want you to know is what is not covered. And if you look at number 3 here, what is not covered under Medicare Supplement Plan A is the Part A deductible of Medicare. Is not covered under Medicare Supplement Plan A. Now, there's an outline of coverage which has to be delivered at the time of application. If you are going to be replacing a supplement, there's a notice regarding replacement that must be given at the time of application. That notice regarding replacement must inform the customer that there's a 30-day free look period to the new supplement that they are purchasing. So if they're unhappy for any reason, they can always go back to their old supplement. An agent's compensation for selling a Medicare supplement can be no more than 200% of the renewal commission for servicing the policy in the second year. Now, Medicare Select is a type of Medicare supplement, but it has lower rates and it also has a restricted network of providers. So for paying that lower rate, they just have a restricted network. Other options for Medicare: disabled employees. In groups of 100 or more employees, then the group plan is going to be primary coverage for a disabled employee. If an employee has end-stage renal disease, then the employer plan will be primary coverage for 30 months. After 30 months, then Medicare picks up. If a senior is over 65 and they continue to work and they are still covered under their group plan, and make sure you know these numbers here, in groups of less than 20 employees, Medicare is the primary coverage for them. If there are more than 20 employees, then the group plan is primary coverage for them. All right, then we have long-term care policies. Sorry about my formatting here, but long-term care policies, so we're leaving Medicare supplements now. Long-term care policies have to be guaranteed renewable for life. They have to have a 30-day free look period to them. When you purchase a long-term care policy, it's like purchasing a disability policy in that there is an elimination period and a benefit period. Long-term care benefits are tax-free to the insured unless the benefit exceeds the daily cost of care. So if you purchase a policy that has a $200 a day benefit for long-term care needs, and let's say they get confined to a long-term care facility and the cost of care is only $100 a day, well, they're still going to receive that $200 a day. However, 100 of it is the cost of care, that's tax-free. But then there's another 100 that they receive that will get taxed like income. Next, it is going to be required by law that long-term care policies must have at least a 24-month benefit period to them. Now let's look at some different levels of care in a long-term care policy. What you need to take away from each one of these is who can provide the care and where can it be provided. First, the top level of care is called skilled care. Skilled care is care that can only be provided by medical personnel, and that care can only be provided in an institutional setting. The next level down from that is intermediate care. This is also care that can only be provided by medical personnel. However, that care could either be in an institutional setting or in the patient's own home. Intermediate care is for people who need occasional nursing and rehabilitative care. Next level down is custodial care. This is care provided by non-medical personnel. So this is the first one that's non-medical. And that care could either be in an institutional setting or in the patient's own home. Custodial care is for people who need help with their activities of daily living. Their eating, their bathing, their dressing, their transferring, which means moving from one place to another. That's why it can be non-medical personnel that provide custodial care. Now, home health care is care that will be provided by a skilled nursing company in one's own home. So it must be some type of skilled nursing company, or the other way would be a community-based organization like hospice could provide home health care. Next is adult daycare. This is care for functionally impaired adults on less than a 24-hour basis. Care includes transportation to and from a daycare center. Meals are usually part of the service, and there are social-related activities. So please associate 24-hour basis or less than a 24-hour basis with adult daycare. And then respite care. Respite care is designed to give relief to a family caregiver. So that caregiver can take a nap, take a walk, drink a bottle of wine, whatever they need to do to just get away for a while. So respite care can be part of a long-term care contract. And then some optional benefits, which could be added for an additional premium. There's a guarantee of insurability rider, which means that they could add more coverage at future dates without proof of insurability. Now, if they add coverage at a future date, the cost of that coverage would be based on their attained age. How old are they that day? These policies could contain a return of premium benefit. It's also like a non-forfeiture type benefit. So in case the insured dies or the policy lapses, they could possibly get a return of a percentage of the premiums they had paid into it. And then every policy has exclusions like pre-existing conditions, mental and nervous disorder, treatment covered by Medicare, Medicaid, or workers' comp. But things that cannot be excluded that you need to memorize for your test. Things that cannot be excluded would be Alzheimer's, dementia, and Parkinson's. Those cannot be excluded from long-term care policies. Now, a shopper's guide and an outline of coverage, similar to our Medicare supplement policies, must be delivered at the time of application. And then if you as an agent would like to sell long-term care insurance, you must have 8 hours of initial long-term care training. And then when your CE comes up for renewal, you must have an extra 4 hours every renewal period. So that's going to do it for this chapter over senior citizen insurance. We'll see you on the next video.